Prices are near the lows of their range for the past 3 years. That's a fact. Middle East tensions have done little to prop up prices until very recently. Also a fact. Israel's oil threat is real and very dangerous. Lower oil prices are good for the US, Europe, and China. They're bad for Russia and OPEC Plus.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. Today's market rundown, we'll be discussing oil's current situation and outlook going forward. We will also discuss the implications of oil's price behavior on precious metals, miners specifically. Let's start with the markets themselves. The dollar is 101.30, down 9. Up 9. Wishful thinking. Let you look at the charts there while we're doing that. 10-year yields are 376, up 3. S&P 500 is 5,700, down 5. The VIX is 19.38, up 11. Gold is 26.51, down 11. Silver is 31.46, up 3. Copper is 460, up 4.75 cents. That's a percentage point. Gold, silver a little lower, working out of that channel very nicely now. WTI 72.79, up $1.24, very strong. Natural gas 272, up in sympathy, although it's really not related, up 7 cents. Bitcoin 61,000 and change, up 458, continues to bounce after its significant sell-off. Palladium 1,011, up 6. Platinum 998, up 5. Okay, that market's pretty much going to do what it does until the palladium stuff works itself out. Grains, soy, unchanged, offered at 1068. Corn, 423, up 5 cents. That's a surprise. Wheat, 615, up 10. Okay, so wheat continues to be strong. And soy has given up the rally for corn. Okay, let's get started. Those of you who may not know, I am an oil person. I'm a commodity person, actually. I'm a derivatives person, really, when you drill down to it. But I've probably spent more time trading oil than gold over the years, although it's not my first love. So I'd like to talk a little bit about oil situation because there are two potentially big conflicting factors influencing the market. So let's do that because it's going to help you see, I think, hopefully the next 6 months and the next 2 years based on how things are playing out. There's the homepage. Goldman, the secret buyer, has elevated prices and reset the gold relationship. Tuesday's PM posts and founders opening night for gold. All right, premium analysis. Why am I on that page? This is where I want to be. We're going to have to start with the current situation and then throw in the two news items. And we'll also have an extended version of this, really drilling down on the geopolitics of it at the end for premium subscribers. Prices are near the lows of their range for the past 3 years. That's a fact. Middle East tensions have done little to prop up prices until very recently. Also a fact. Israel's oil threat is real and very dangerous. We'll explain that in a little bit. Lower oil prices are good for the US, Europe, and China. They're bad for Russia and OPEC Plus, not necessarily bad for the Saudis. Government intervention is suspected of keeping a lid on futures prices. Term structure indicates some unnatural deferred hedging. That's my opinion based on evidence that kind of flushes that out. They did it in gold. They can do it in oil. Now, it's not 100% sure, but the market is not acting the way it should on term structure given its pricing power right now. Next, OPEC's solidarity is starting to slightly fray publicly. Not a big deal yet, but could be a big deal down the line. Threats from Saudi Arabia are usually serious, even if somewhat geopolitical fodder. We have a news item on that we'll share with you. Lower oil is, I think I already said that. Lower oil is good for China, right? Do we know that? No, we know that already. Let's go a little bit lower. Here's the bottom line. For now, the risk to oil is higher, not just from Israel-Iran risk, but from likely initial compliance by junior OPEC Plus members to the Saudi warning. Again, we'll get to that in a second. This also reflects max pain to CTAs. They're very short this market right now. Event risk warns of $5 moves either way. If war escalates, which really should be a $10 move if war escalates, or alternatively, if OPEC plus frays more. So war escalates, you should pop $10. OPEC disintegrates, won't happen anytime soon. You drop $5 probably immediately. What does this energy price drop mean for miners? Lower oil prices is good for energy costs. That's not something I think is new to everyone. But this has been apparent for some time. That means mining shares are not attracting flows for a different reason. If that reason makes no sense, you buy them and get a nice dividend while waiting for a cap gain, depending on who you want. Because if they have extra cash flow and they're being run financially well, then they're going to either declare dividends or they're going to buy their own shares back, assuming that they're running their company properly. Now, there are a lot, individual miners have a lot of variances, a lot of variations within them. But look, if mining is fundamentally undervalued, it is. Why is that? Well, one of the reasons is some management is not good. Some of them are hedging production, which is not bad. They need to hedge production, perhaps $500 lower. They have no more to hedge, but they're not disclosing that. And by not disclosing that, they're not letting you know what their hedge book looks like. And if the market rallies, only the really deep institutional dives understand that. Another reason they might not be rallying, well, they've been depressed for so long, and I believe that they're shorted by the banks as part of the play to keep miners steady. Gold steady. Look, if you're long gold and you're short miners, you're making money because you're buying the gold cheaply from them. So that's like a carry trade. And there's other reasons as well. I think generationally, people don't, the next generation does not see miners in the way they should. And, they're not really a good industry at promoting themselves uniformly. Not since the crash of the 80s and then the disaster of 99 with Ashanti and Cambior. But there's plenty of good miners out there. You just have to know where to look. All right, let's go to the news items circling oil. The first one, Saudi minister threatens price war to fellow OPEC Plus members. The kingdom called out members for overproducing in what was seen as a veiled threat of a price war. The statements were interpreted by other producers as a veiled threat from the kingdom that it is willing to launch a price war to keep its market share if other countries don't abide by the group's agreements, they said. Now you can read the rest of that. Saudis have carried out on these threats before, and they have advanced scalability and pumping ability that other nations do not. I'm not saying that they're head and shoulders above them anymore, but I am saying that you're witnessing the beginning of a fraying. I'm not saying it's significant. How it resolves itself is important, and we will discuss that at the bottom. Now, Israel says it's likely to target oil facilities. Israel's military is preparing a significant retaliation to the attack by Iran. They are readying significant response to Iran missile barrage and could involve targeting oil facilities. These are Iran's oil facilities. That's a very, very dangerous place to be messing around. That's the Strait of Hormuz. We will discuss that further at the bottom. But this is the Iran side. That's the Saudi side. And this whole area, this is where world wars start. We've never had it happen there before. But I'll give you an idea militarily before we get into it in detail later. The Strait of Hormuz, this whole area in here, and this island here, if there's a problem here, there's a big problem. And you can have a problem by having one ship sunk there, okay? You can target that. There's also, Iran also has military over here, okay? And the U.S. has military out here in the ocean that could, probably hit a dime with a cruise missile. So, this is Israel doesn't have to hit anything there to cause a damage. They can also hit Saudi Arabia. And there's a lot of politics involved here. Very, very, very touchy. And oil is right to rally the way it has so far. Okay, we'll discuss that more. All right, data on deck today is ADP employment, which notoriously has been wrong, but you still can't ignore it. Let's look at the charts for a second before I do the next part. All right, I do want to comment. We talked yesterday about RSI and gold. Remember what I said? We had a great day yesterday, right? Nice, completely engulfed yesterday's bounce. Yesterday's the other day's sell-off. So you have this, you have the whole thing, bull flagging upward, but now this happens again. And you're wondering, I think today is an important day. Everybody says a day is important, but today is an important day for continuation. If the day closes red significantly, like, more than halfway through here, if the day closes red, then I think we might break lower for a little bit longer. If the day closes here or higher, you know what? Then this RSI is going to say all systems go, which snowballs into the weekly. The weekly turns up, and the monthly already says ignition, you can go. And that's my view on gold. Silver is, look, silver just had an incredibly strong monthly close. There is more money that is coming. Any other month, there'd be more money coming into silver right now, plowing into it, driving it higher. But right now, we are in sell season. And although the market isn't lower, it just means there isn't as much buying. And I think the CTAs are a little bit too long right now. So I think, considering the lack of fresh money coming into this market, silver's holding, and by the way, and the selling of silver against gold buying, silver's holding up pretty well. Now, the catalyst for silver thus far, and the next catalyst going forward, will be China. China has another stimulus boost, and they're going to. If the market doesn't comply with what they want, they're going to do it again, right? This is the whole Draghi moment thing. And you're going to see copper run, you're going to see silver run, and then you'll see gold run. Okay, that's it. I'm Vince. Have a great day.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, where this week's specials include 2024 American Silver Eagles for only $5.25 over spot, and 1 ounce gold Argo Heraeus Dragon bars for only $69 over spot while supplies last. Find out more, send us an email at arcadia@milesfranklin.com or call us at 833-326-4653. And as always, thanks for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.